It's another bombshell from Hindenburg, the American short seller. First, they targeted the ADANI group. Now they're going after the Indian regulator.
The stock market is no stranger to controversy. But when a giant like ADANI gets called out, it's a whole new level of drama.
Of India's market regulator has strongly denied allegations from Hindenburg Research of conflicts of interest around investigations into the ADANI group.
Recently, the Indian stock market was shaken by a huge storm, thanks to a report from Hindenburg Research. This wasn't just any report. It targeted one of India's biggest business groups, causing shockwaves across the financial world. And now, the stakes have gotten even higher with new allegations involving SEBI, India's financial watchdog. Let's uncover what's really going on and what it means for the future of the Indian market.
US-based short seller Hindenburg claims SEBI chairperson Madhavi Puri Buch and her husband held a stake in offshore funds allegedly linked to the ADANI group. Alleged conflict of interest in the probe against the ADANI group.
Recap: Hindenburg's first strike on ADANI. Let's rewind a bit to where it all began. Earlier this year, Hindenburg Research, a company known for digging up dirt on big corporations, set its sights on the ADANI group. Now, the ADANI group isn't just any company. It's one of the biggest in India, with interests in everything from energy to infrastructure. But Hindenburg wasn't impressed. They released a bombshell report accusing ADANI of serious financial wrongdoing, including stock manipulation and fraud. This report was like dropping a match into a barrel of gasoline. The ADANI Group's stocks took a nosedive, investors panicked, and the Indian stock market was thrown into chaos. The accusations were detailed, calling out the ADANI Group for using offshore shell companies and inflating stock prices. The report also questioned the transparency and governance of the group. ADANI denied everything, of course, but the damage was done. The report led to billions of dollars being wiped off ADANI's market value. It was a massive hit that not only affected the company, but also raised questions about the overall stability and regulation of India's financial markets. The new controversy: Hindenburg vs. SEBI chief. Just when you thought the drama had settled, things took a new twist. The spotlight shifted from ADANI to SEBI, the Securities and Exchange Board of India, which is supposed to keep the stock market in check. SEBI's role is to protect investors, and after the Hindenburg report, everyone was looking to them for answers. But instead of clarity, we got more confusion. A new controversy erupted when Hindenburg made fresh allegations, this time directly against SEBI's chief. Hindenburg claimed that SEBI's chief was involved in some shady dealings, particularly in how the investigation into the ADANI group was handled. They accused SEBI of being too slow and lenient, suggesting that the watchdog might have been compromised. This was a bold move by Hindenburg, as it questioned the very integrity of India's top financial regulator. These accusations raised serious concerns about whether SEBI was truly independent or if it was under pressure to go easy on powerful corporations like ADANI. Understanding the alleged web of investments. So, what exactly is this web of investments everyone's talking about? To put it simply, Hindenburg claims that the ADANI Group has been playing a complex game with its finances. They suggest that ADANI has been using a network of offshore companies to funnel money back into its own businesses. This makes the company look more profitable and stable than it really is. It's kind of like moving money from one pocket to another, but making it look like new money is coming in. These offshore companies, according to Hindenburg, are set up in tax havens where regulations are loose, and it's hard to track where the money is actually coming from or going. The idea here is that ADANI might be inflating its stock prices by secretly buying shares of its own companies through these offshore entities. If true, this would be a serious form of market manipulation because it misleads investors into thinking that the company is doing well and worth more than it really is. Hindenburg's report pointed out specific transactions and companies that they believe are part of this web. They claim that these actions not only make the ADANI Group look stronger, but also help it secure more loans and investments from banks and other financial institutions. This creates a risky situation where the company's actual financial health might not be as solid as it appears, putting both investors and the broader financial market at risk. But here's the kicker: proving these allegations isn't easy. The situation is a bit complex, and tracking these financial moves across borders and through various shell companies is extremely complicated. That's why SEBI's investigation into these claims is so crucial. SEBI's response: defending integrity. Now, let's talk about SEBI's response to all these accusations. As the regulatory body overseeing India's financial markets, SEBI couldn't just ignore the noise. When Hindenburg pointed fingers at them, especially their chief, SEBI had to step up and address the situation. The regulator quickly came out, strongly denying any wrongdoing. They stated that their investigation into the ADANI Group was ongoing and thorough, and that no one was being let off easy. SEBI's chief also defended the integrity of the organization, emphasizing that SEBI operates independently, without influence from any corporate entities. They argued that the accusations by Hindenburg were an attempt to undermine the credibility of the regulator and destabilize the Indian financial markets. SEBI's defense was clear: they were doing their job, and they were doing it right. But the response didn't end there. SEBI also took steps to show that they were serious about the ADANI investigation. They announced that they were deepening their probe into the ADANI Group's finances, especially focusing on the alleged web of investments that Hindenburg highlighted. They wanted to assure the public that they were leaving no stone unturned, and that they were committed to finding the truth. Before we continue with the rest of the story, if you're finding this video informative so far, don't forget to hit that like button and subscribe for more breakdowns of the latest market dramas. Now let's get back to our video. Market reaction. Impact on Indian stocks. So, how did the market react to all this? Well, it wasn't pretty. When Hindenburg dropped their report, it sent shockwaves through the Indian stock market. Investors, both big and small, started panicking, leading to a significant sell-off in ADANI Group stocks. The fear was that if the allegations were true, the company's value might plummet, and no one wanted to be caught holding the bag. The ripple effect didn't just stop with ADANI. The entire stock market felt the tremors. Other companies linked to ADANI, like those with business ties or similar structures, saw their stock prices dip as well. It was like a chain reaction. Investors began questioning the stability of other Indian conglomerates, worried that there might be more hidden risks out there. But the impact wasn't just limited to the stock prices. The overall sentiment in the market turned sour. Confidence in the Indian financial system took a hit, with many investors starting to question the transparency and reliability of the market. Foreign investors, in particular, became cautious as they rely heavily on the integrity of the market and the effectiveness of regulators like SEBI to protect their investments. However, it's important to note that not everyone was selling. Some investors saw the dip as an opportunity to buy ADANI stocks at a discount, betting that the company would bounce back once the dust settled. This mix of reactions made the market extremely volatile, with prices swinging wildly as news and rumors spread. What this means for global investors. Now, let's zoom out a bit and look at the bigger picture. What does this all mean for global investors? First off, the Hindenburg-ADANI situation serves as a wake-up call. It highlights the risks involved in investing in emerging markets, where regulatory oversight might not always be as strong or transparent as it is in more developed economies. For global investors, this controversy raises red flags about the Indian market. It's a reminder that even big, seemingly stable companies can have hidden vulnerabilities. The incident has likely made some investors more cautious about pouring money into India, especially without doing deep due diligence. But it's not just about India. This situation also touches on broader concerns about corporate governance and transparency worldwide. In an interconnected global economy, what happens in one market can have ripple effects elsewhere. Investors around the world are now paying closer attention to how companies operate, especially those with complex financial structures or ties to offshore entities. On the flip side, the way India's regulators handle this situation could either restore or further damage confidence in the market. If SEBI and other authorities can untangle the web and hold wrongdoers accountable, it could reinforce the market's credibility and reassure investors. But if they fumble, it could lead to long-term damage, not just for the ADANI group, but for the perception of India's entire financial system. Who wins? Who loses? So, who really wins and who loses in this whole situation? Let's break it down. On one hand, Hindenburg Research seems to have scored a win. Their report not only grabbed global attention, but also shook one of the biggest names in Indian business. For them, it's a big validation of their work, showing that they're willing to take on giant companies, even in markets like India. They've likely gained more credibility and influence, especially among investors who rely on their insights to make decisions. On the other hand, the ADANI group is clearly on the losing side, at least in the short term. Their stock prices took a major hit, and the company's reputation has been damaged. Even if they manage to come out of this without any major legal consequences, the trust issues might linger, affecting their future business dealings. But it's not just about these two players. Indian regulators, particularly SEBI, are also in a tough spot. How they handle this situation will either boost or weaken their credibility. If they manage it well, they could emerge stronger, showing the world that India's markets are well regulated. If not, they could lose the confidence of both local and international investors. Conclusion. In the end, while Hindenburg might seem like the clear winner, the real outcome will depend on how things unfold in the coming months. As we look ahead, it's clear that the road won't be easy for anyone involved. The ADANI Group will need to work hard to rebuild its reputation and regain the trust of investors. And it's also a critical moment for SEBI, as they have the chance to show that they can handle such crises effectively. We will keep you updated on this issue. Thanks for watching, and like and subscribe for more insights on the world of business and tech with Byte International.